Hey, what's going on, everyone? Welcome back to another episode here with me, Jeff, on Let It Grow Investing. Thank you very much for being here. I'm trying to get the sound right. We're trying to check everything out here. But yeah, crazy times, right? We've got a lot going on in the White House. We got a lot going on with Powell. We got a lot going on with tariffs. There's a lot of different things to cover out there. So we are going to try to cover it all. We're going to try to get updated and see just what the play is for this week. So thank you very much for stopping by. And yeah, let's roll right into things here. So yeah, we had a pretty solid week here. If I go and check out the S&P 500, we're going to pull that up right quick. And we're going to pull up this screen. We'll share it with you here, and I will try to stay right on top of it with you guys this time. S&P 500, that's the 5-year. We're not looking that far. We're looking 5 days, right? So we are trending up. 61.80 start of the week, 62.80 by the end of the week. So up about 100 points, and a nice solid gain here. So a lot of different things to take into consideration when we're looking at this, right? We've got the big, beautiful bill was signed into law. That was passed through on Thursday, and I believe signed on Friday. The market was closed. And you would think going forward, well, hey, would that what would that do come Monday morning? Well, currently futures are open, but the market is down. The market is going to be down for a couple different things, right? We're looking at Trump tariffs, and we're trying to figure out just what is going on over there and why the market is actually selling off. So if I do go over to look at the Trump tariffs, well, this is about Rice is key in U.S.-Japan trade talks, but there are a lot of different things going on behind the scenes. So August 1st is that deadline for the next country-by-country Trump tariff talks. So there is a lot of uncertainty just about what is happening with these different countries and the tariffs going on over there. So still putting the screws to all these countries that have not made trade deals thus far with the U.S. And that is definitely affecting the market and where it is going for Monday. Yes, it is Sunday night. We're already thinking Monday and what the market is going to do after this holiday weekend. So if you are in the U.S., hopefully you had a nice 4th of July, nice Independence Day, 3-day weekend, and cookouts and barbecues and parties with friends or whatever else you did. Hopefully everyone's got their fingers after all the fireworks and everything else. Finger check. But no, I mean, so there's a lot of different things we're looking at, right? So we are looking at these tariffs. We're looking at what the Jerome Powell is saying. This is actually going to be the CME group, the Fed Watch tool. We've looked at it in the past. We've kind of been off of it as rates have stayed high for a long while, but I am hearing talks that by the end of the year, and I am looking at the December 9th meeting. This is what I've got clicked here. We are looking at our current rate being 425 to 450 basis points. And by the end of the year, this is now December 9th. This is what I'm looking at. This is where all the analysts think that we're going to be. So between majority, I'd say, right, are going to be between 275 and call it 350. That's about 66%, 67% of the economists are saying we're going to be in this range, right? So at a minimum, 100 basis points lower. On the higher end, about 175 lower. So potentially that could be a couple rate cuts by that given point in time, about 5 months from now. So we're looking to see what's going to happen there, right? So there's conflicting stories here. We've got the tariff talks, which are going to be bad for international trade, right? We're going to be potentially looking at higher cost of goods that we are importing from other countries. But then as we are looking at what the Fed is going to do, the Fed is going to cut rates by the end of the year. So that tends to be better for growth stocks. So you're in this balance of, I want to buy these now. Do I think that the tariff talks are going to get so bad that short term, these growth stocks, these tech names, the QQQ and the NASDAQ is going to sell off? But by the end of the year, we're thinking there could be a growth story. So it gives you potentially an opportunity to buy some of these NASDAQ names by, maybe by August 1st. If they don't come to the table, are some of these tariffs going to start getting hit? Are these countries one off going to be getting hit with these higher tariffs than what they're even seeing right now? And then by the end of the year, hey, the Fed is going to make it a little bit easier on us, cost of borrowing, cost of lending. The startups are going to be back in the game. They got cheaper cost of capital. There's going to be a lot of different things going on out there. So it's really a difficult situation to navigate. Who benefits from the tariffs, who benefits from the rate cuts, and then who's going to be benefiting from the big, beautiful bill. This is from USA Today. And this is what we were looking at here, right? So we've got extended tax cuts, 3.7 trillion. Now, who is going to be affected by that? That lower income is going to be hurt the most, right? So if it says if your income falls below 58,000, you're likely to lose benefits such as Medicaid, SNAP, and student loans. So again, we're looking at all those different plays, right? We were talking about SoFi benefiting from this, as Trump is not going to be, playing favorites with student loans. He's going to throw the student loans right back at him. There's going to be no debt forgiveness. There's going to be all of that. So oddly enough, I do have some covered calls on my SoFi stock. Actually, all of them are on covered calls right now. I think we are probably going to get this pull forward, and then it's going to come back down. That is my 2 cents. That is why I am in the market with these covered call options to generate some capital and put that into some other place. So yeah, we've got that. We've got the top percentage is going to be, those top 1% are going to see about a 0.5% increase of the money that they're going to be able to save, which is about $72,000, mainly because they are paying the lion's share of the taxes. And if they're getting the tax breaks, they're going to see the most of that. Now it is only 0.5%, but they make, more money than I'll probably ever see in a year at $4.8 million, unless you guys click like and subscribe and share this to everyone in the world. I would appreciate that, but I don't think it's going to happen. So anyhow, we've got that group saving the most amount of money. The 1.1 to 4.8 million saving 0.5%, about $27,000 per year. 430 to 1.1 million, saving about $17,000 per year. So yes, I know it's going to look like they are saving a ton of money at this top 1%. And I'm sure there's going to be a lot of arguments that they shouldn't be saving any money. In fact, they should be paying more. I don't necessarily disagree, but I do think that some of the government spending might not be going to where it needs to go. I think it all needs revamped, and who's getting what really needs to be taken into a lot of account. And are people abusing the system on either side? I'm sure they are. And I think that needs to be taken into consideration as well. So, yeah, I mean, there's a lot of different things to look at here, but that is what the numbers are looking at from USA Today. But wait, there's more. Other tax cuts, credits, and gifts. Make sure we're still recording here. Looks like we are good, and we are going to go right back to this big, beautiful bill. We've got extending the tax cuts from the 2017 tax bill. Americans who live in high tax states such as California, New York, New Jersey will get a bigger income tax deduction for state and local taxes known as SALT. This is going to last for 3-4 years, and I believe it is raising it up to about $40,000. Then after that, it'll go back down to the $10,000 cap. This is going to be interesting. No tax on tips or overtime wages. There are some caveats to that. Starting this year, first $25,000 of tips will be tax deductible through 2028. With $150K income limit, $300 jointly. Jobs considered would be food servers, beauticians. Starting this year, up to $12,500 of extra overtime pay will be tax deductible. So yeah, that first $12,500 is going to be tax deductible. Over that, I'm sure it's going to be taxed at a different rate. I'm not too sure of the whole thing through that. Standard deduction permanently raises standard deduction to $15,750 for individuals, $31,500 married, and $23,625 for heads of households after 2025 adjusted for inflation. This is that SALT deductions, right? Taxpayers can write off a portion of their state and local taxes in those high tax states. Raises the cap from $10,000 to $40,000, 1% annually, and deductions will start this year. It's going to fall back to $10,000 in 2029. So after that 2028 tax year, it's going to go back down. I guess it is a temporary way to write off some of these taxes. I just got our tax bill. Man, it's painful the amount of taxes that we pay in this country, and to think that it all started from taxes on tea is kind of crazy where we ended up. I'm getting all sorts of Latin taxes that I didn't even know what they were. Ad valorem taxes for apparently the perceived value of something. It just blows my mind as to everything that we get taxed for on every little thing. It really does blow my mind. You can deduct car loan interest. Car buyers can deduct up to $10,000 annually in car loan interest payments if they buy a vehicle assembled in the U.S. So if you're buying a vehicle in the U.S., which is going to be a benefit to obviously U.S. automotive makers that are building here, or I guess just assembled here. It doesn't even necessarily have to be a U.S. company. I guess it could just be a Toyota that's built in North Carolina or Kentucky or wherever else. You can deduct up to $10,000 annually in car loan interest payments. So that could be huge, especially as Maryland's raising the sales tax on automotives because they blew through a $4 billion surplus. The deduction phases out between $100,000 and $150K and between $200K and $250 if you file jointly. Senior tax deduction through 2028. Each person over 65 can deduct an additional $6,000. Deduction begins phasing out at $75K or $150 jointly. Estate tax exemption allows people to pass $15 million tax-free to their heirs. That's pretty cool. Without the change, the almost $14 million exemption would have expired at the end of 25 and revert to just over $7 million. Child tax credit raises from $2,000 to $2,200 after 2025, being adjusted for inflation. Children under 8 would receive $1,000 each to open special savings accounts. Oh, I got one of them. That's good to know. We will have to take a look into that. Tax-free contributions to account limited to $5,000 annually until the child is 18. Okay, so you can contribute to account tax-free for $5,000. Savings can be used after the child turns 18. That's pretty cool. Private school vouchers up to $5,000 and tax credits to use for education from private schools to homeschooling. Okay. So yeah, a lot of different things to this. More for defense, increased spending to $153 billion. So again, we're going to be looking at those defense contractors to be getting a little bit more money that way. So Lockheed, Raytheon, General Dynamics, Boeing, the list goes on. Include $7.5 billion for quality of life improvements to housing, healthcare, childcare, and education. Border security, you saw that one coming. Private college war chests. Tax applies to schools with 3,000 or more tuition-paying students. The larger school's endowment per student, the higher its tax rate on the endowments. Okay, we got what we didn't change, fossil fuels. Truck emissions would have let companies pay to opt out of environmental permit review of their medium and heavy-duty vehicles. Postal Service does not have to scrap its $7,200 or 7,200 electric vehicles and charging equipment. The USPS plans to purchase about 66,000 EVs by 2028. The Consumer Financial Protection Bureau can't have their funding cut. This one hits close to home for some people that I know. I know they are getting sued by employees for the things that were going on over there. That is kind of crazy to me. So that is a whole different problem set of things that we've got to get through there. But that is another thing that I'm definitely kind of paying attention to. We've got definitely kind of. Anyhow, we've got what areas will get less money. This is going to be those government programs. We got cuts to Medicaid. 11.8 million people could lose their health insurance coverage over the next decade. 80 hours per month work requirement for adults without children or disabilities. More frequent eligibility checks. Program would not fund services at clinics that also perform abortions. Tightens rules for payments to states. Okay, so a lot of different things there that they are going to be cutting. The SNAP green energy rollbacks, the $7,500 tax credit for EVs, that'll be going away on September 30th. So that could be hurting the EV car companies. Has been a big driver for a lot of people to get that cash back when they're buying an EV. So a lot of different things here, right? A lot of different things to unwrap. A lot of different varying things as to what to think about doing with your money. So I kind of want to back up a second. And I do want to say, first off, if you're new here, if you are just getting started, I think, dollar cost averaging into the market is going to be your best bet. I'm seeing a lot of these questions right now. I've got something started. I don't know what to do. Where do we go from here? I put, $100 into this account. Great, right? Save as much as you can. If you can save about 15% of your income for retirement, that would be fantastic. I understand that that's not possible for everyone. I understand that groceries are through the roof. I understand that housing and taxes and everything else are through the roof. Definitely start sooner than later, right? I see people on a lot of different groups. Hey, I'm 20, I'm 28, I'm 35, I'm 45. I haven't started, whatever. Some people have, other people, one kid, I'll say kid, was in a situation where he was, $60,000 in truck debt, still living at home, putting a little bit of money away, making 90 grand a year. What do you do, right? Well, first off, you didn't need a $60,000, $70,000 truck when you're 20 and you're living at home. You need to be saving up your money. And I mean, I understand some people want to live at home forever. They have different family units where they're all living under one roof. I don't think that was the case here. He's trying to move out, trying to figure out how it was all going. So yes, think about not getting in debt, right? That is going to be your first step. Second step is going to be saving for all the things that you need in life. You need a house. You need, you do need a reliable mode of transportation. I don't think that you need a $70,000 truck. I could buy a $70,000 truck and I still don't buy a $70,000 truck. Nonetheless, I think we have to really focus on the amount of debt that we're incurring, and then really focus on where our money is getting invested. If you are just simply going to be a set it and forget it investor, I think simply buying a broad ETF is going to be your best bet. If it's VOO, I think that's going to be one of your best ways to get the whole market in one fund. I know there's a bunch of other ones. I'm aware that that's a Vanguard one. I'm going to go ahead and pull up VOO, right? We're looking at this one, 5 years. You've made a ton of money. And I'm not just looking at it from COVID forward. I will go back behind COVID and I will look at it in 2019 and show you that it was 265 and now it's 575. So you're up $310 on one share. So, if you had 10 grand put in there, you're probably at like 25. We could look at the performance of VOO, right? And when you're buying this, you're buying a basket of stocks, right? This is simply buying all 500 of the S&P 500 stocks in a varying percentage into your portfolio. So yeah, if you bought 10 years ago, $10,000 would be worth $35,800. So growth of 10,000, right? That is all we are on here. Oh, we are looking at, a lot of U.S. stocks. 99.4% are U.S. We're going to be looking at companies like Microsoft, NVIDIA, Apple, Amazon, Meta, Broadcom, Alphabet, Tesla, Berkshire, and more Alphabet, Google, right? So broad basket. This is going to account for about 35% of what your money is going to when you buy one share of VOO. You can simply use my link, get started on E-Trade or Webull or wherever else you're investing. You don't have to use my link. Go where you're comfortable. Definitely would appreciate using the Webull link to get started. I know you get some free shares. I get some free shares. Everyone wins. However, I think this is a great way to go. And if that's all you're going to do, if you're, 20 and you don't want to get into looking at this every day, I completely get it. But going forward, I definitely think that putting in that 10 to 15% of your money into an investment account for your future is going to pay you dividends in the long run. It's going to pay you dividends sooner, but you're going to be grateful for yourself for buying these stocks and letting them sit in an account. Your 401, IRA, whatever match you can get from your employer. Mine doesn't because I'm self-employed, but I try to pay myself first. But yeah, this is a great way to do it. Now, if you're watching the market, you're looking at what the tariffs mean. You're looking at what this big, beautiful bill is. You're looking at what the Powell's doing, and you're trying to get a sense of what is coming down the pike and what is going to be the best thing to buy right now. That is a tricky question with what is going on. First up, I'm going to say that with this bill coming through, yes, they're spending in some different areas. Some of them are going to be more domestic in nature. I think those stocks are probably going to benefit right now from the standpoint that, one, the government is putting more money in those places. Two, the tariffs are going to mean that more international stocks, exposure to stocks are going to get hit. So yes, it makes it a little bit more difficult to buy something that is going to be reaching a lot further. So Alibaba, no, sorry, not doing it. I'm not looking at something like this right now. Too much exposure to China, too much unknowns. I'm not doing it. and I'm going to probably blank a lot of different Chinese tech names right now because I'm simply just not in them at the moment. Do you want to go in and buy an NVIDIA? I've looked at this one. If you're in it for the long term, I think it's fine. We're going to hit 4 trillion this summer. I got a strong feeling being at 3.9 trillion. NVIDIA, and what's the other one that's creeping right on up to 4 trillion? Is it Microsoft? 3.7 trillion from Microsoft. So these two are probably still very solid stocks that I think are going to do well long term. We might have some hiccups here with all these tariffs, right? We just simply do not know what is going to happen in that regard. Tesla, do we want to run out and buy Tesla right now? I don't really think that I want to, but I understand people that think that the robo-taxis are going to take over the world. I also see that the $7,500 tax credit going away is going to hurt sales. So there's a lot of that. I know Kathy Wood is out there buying Shopify. You know, this is going to be one of the ones that is going to do better from a Fed rate cut and potentially with more people shopping online and spending more of that cash that they're saving from these tax savings. Maybe that works in the short term. Maybe it doesn't, right? I'm not too sure with what's going on with tariffs if that's going to affect Shopify. Now, let's see what the analysts say. I haven't really looked into this one. I can tell you a little bit off the top, just looking at some numbers. It's probably pretty fairly valued. There's a more downside. I would have to do more homework on this. I simply haven't done it. I'm just throwing out the name that I just saw. It kind of gets you back into the thought of what to buy right now. And I'm thinking kind of the boring names, right? Consumer goods, consumer packaged goods, utilities, maybe some REITs if you're in it for some dividends. So I would maybe be thinking about like a realty income. Does that look all right? That's trading a little high. I've also heard of the teenagers getting out of vapes and going back to cigarettes is a trend right now. Just something like an Altria look, poised for some kind of growth. They're actually trading up right now pretty high compared to where they've been. It's probably at a yearly high right now. So maybe you don't want to run into that one. Philip Morris, what is looking like over there? Very little upside over there, but at least it's positive. Do you want to get into that? Some people don't want to get into these sin stocks. Are we into the point where Royal Caribbean just hit a high last week? Does that keep going, right? I don't think that it does. So travel might not be the way for me to play it. We've also got things going on in Iran. What's going to happen with oil? I know they still need to sell. They need to raise capital. So they're still not really going to cut production because they have to make it. So there are so many working pieces that are really just across the board difficult. So I'm looking domestic, right? Next era, not too much in the way of upside. What about a Duke? What's Duke looking like on the way of, there you go. There's 12%. That might make sense. So it's probably going to be a lot more protected. Even on the low, you got some downside protection. Hopefully we can see about 12%. That'd be awesome, right? So 12% on a utility and a 3.5% dividend, you're 15% of upside here buying into Duke, and you get some protection from rates. You also, as rates come down, what do we get? We get more buildings. So we're going to get more houses. People are moving into houses because they can buy more house for the money that they are able to put at it. And now they're hooked back up to the energy companies. So these companies can see more growth while rates come down. They're not going to be so affected by tariffs because they aren't importing anything. Maybe some copper, maybe some things like that, but they're not really. I don't know that they're running that much in new lines. I guess they would be running some new lines, but there's some different things that are going to be at play, right? So they can also get copper from other sources rather than a country that is highly tariffed. So there's going to be a lot of different plays here. So yeah, I'm looking at those. I don't necessarily want to get into a what was I just thinking? I just lost it. Some of these different food plays are going to be tricky. I don't know what Chipotle looks like right now. What kind of upside do we have on Chipotle? Not much there. I still think that something like a Costco could be a good angle to play. 12% there. We're sitting at 987. We're looking at an average price of around 1107. So my point is, I know I'm long-winded on this one. You're looking for the stocks that are not going to be torn apart by tariffs. They're going to do better as rates get cut. maybe as the tariffs come in, maybe we can buy some of those on the dip. But if you're looking to buy tomorrow, I'm thinking the utilities, I'm thinking consumer packaged goods, I'm thinking something like a Costco, what is going to be able to kind of navigate those waters of tariffs, but they're still going to have a broad base of items that aren't going to be heavily tariffed, right? They're still going to have a lot of food that is going to be local. They're still going to have gas sales. They're still going to have memberships and subscriptions on that front. So there's a lot of different things that Costco is going to do really well. Google's got some upside. They also have a lot more to be worried about when it comes to some of these tariffs, right? Apple, I know they just posted some 8% growth on iPhone sales in China. They do have a little bit of upside, but yes, you have a lot more to the downside as well. So, again, not everyone thinks that they're going up. I would have to take a look there. But I'm looking at what the overall market could throw our way with tariffs. So am I saying not to buy an Apple or not to buy an Amazon? No, I'm not. I think you can buy it, but you have to know that it might be a rocky couple months, right? And then I think once we get this tariff talk out of the way, once we start seeing rates come down, I think these are going to run back up. But I do think we might get a better entry point on some of these names that are highly tech heavy before rates start coming down by the end of the year. Amazon, 9% up. If I'm looking at let's take a look at Meta. That one has run up to that 700 price point that I was really looking at the beginning of the year. We still have some upside, but we got downside, right? So there's not much on the averages. So for those reasons, I mean, I still really like Lilly. I really do. I still think that we got a lot of upside here. And yes, there's about 10% of downside, but it's a risk that I would be personally willing to take. That's why I bought it for the investing challenge last week. However, for this week, after all these stocks have already ran, we're looking at a lot of highs for a lot of these names. And I'm just trying to get this one goes back to 187 from last July. And I don't think there's too much upside left on AMD. No, we are down to the negatives. Remember when it was about 30% of upside, and I said I was buying this when it was in the 80s? Yeah, we missed that window. If you didn't buy, that's too late in my mind right now to go ahead and buy this. Although as these new chips come out, the 350s are out, the 400s are going to be coming out. I still think AMD is in the beginning innings. However, I do think they're going to get a pullback and a better entry point than buying in at 138. So I'm not personally buying AMD, but I am going to be buying Costco. That is going to be the name this week. COST. I think they can weather whatever storm tariffs throw at them. Is it the perfect entry price? No, I don't think we normally get a perfect entry price at Costco. It is normally priced to perfection. The fact that we can get in with about 12% of upside, limited on this downside, right? We've got 975 on the downside, minus 1.25. I think this is a stock that I want to add right now. It's a cyclical name, right? We aren't looking at things that are going to be, so dependent on tariffs. There's going to be they're going to have a lot more diversification in the things that they're holding in inventory. So a lot of things that people have to have, some things that people don't necessarily need, but they're going to balance out that inventory, and I think they're going to be able to control their prices better than most. So I said that wrong. I know that I said that wrong. But yes, I'm thinking Costco for a lot of the things that they offer, the price protection that they have, the subscription model that they have, and the amount of downside that they do not have. Most of it's looking like we're pointing up. So we could take a look here real quick. I'm going to do that. We're at a PE of about 57 on the trailing 12 months. Earnings is really solid, not much of a dividend. We are going to look on Refinitiv real quick. I'm going to share this one for you guys. Buy rating, we are looking at a 5-year return of 223. We are looking at 2 upgrades. We got around 8% of price target appreciation. We are looking at earnings. Nice climb here, right? We're looking at earnings going from, I can hardly read that, 16.5 to 18.1 to $20.50 by the end of 26. Annual revenue about 8% per year. Very, very nice, right? Predictable growth, solid growth, high single digits. Dividend growth around 13%. Dividend payout low. They can continue to raise that dividend payment as this stock keeps on climbing. They are trading at a premium, about 26% on that forward PE to about 50.9 on the forward. Where's the peg ratio? Oh, I don't like that. Peg ratio is a 5.2. I guess they normally trade at a 4.2, but that is paying up for premium quality. It really is. People are willing to pay a 4.2 on the regular for this thing. I don't like that I'm buying it at a 5.2, but I like the name, and I think other people probably do too at this current point in time. So I'm going to stick with it. Price to sales isn't crazy. It's a 1.6 versus a 1.2. And the S&P is going to typically trade at like a 3.1. I generally want to see a peg ratio under a 2, right? I definitely want to see that. We've talked about that before. You can probably go back a couple episodes and get more in depth into the peg ratio, but that's what I'm looking at here. So yeah, that is what I'm looking at. That is what we're doing. I will be buying Costco, ticker COST, for the investing challenge for tomorrow. There's a lot to decipher here between tariffs, between the big beautiful bill, between what Powell said and what the Fed Watch tool is pointing at for rate cuts by the end of the year, which is going to spur a lot of different activity as rates come down. Also, we're going to be, diving through a lot of these problems as to what tariffs are going to do as Trump throws more tariffs across the board to a lot of different stocks that are going to be out there. So there's going to be a lot of uncertainty as this happens. We saw this happen back earlier in the year, and I think we're going to be in a similar cycle if the tariff flag starts getting flown, coming out strong. So that is what I'm looking at. Hopefully that gave you a little bit of clarity as to what the big beautiful bill is, who it affects, what it does, where some of this money's going, where it's not going, who's saving money, who's paying more money, and all those ins and outs of just exactly what it means. So that is what I've got for you guys today. Hopefully we can find some stocks that are going to be saving us, from some of these tariff pains, and we can kind of navigate these waters together. If you got anything that we are looking at or that you are looking at, feel free to share it. You got questions, comments, concerns, feel free to leave them on the Spotify link, not Shopify. I was going to say Shopify because I was just talking about it. The Spotify link for the podcast. You can leave them on YouTube. I try to check them, but I'm not the best at checking them all the time. So definitely let me know. Thank you guys for being here. Thanks for stopping by. Please make sure that you like, subscribe, and share, and I will catch you in the next one. Take care.